I'm Greg Hunter. Welcome to USAWatchdog.com. The markets have been absolutely crazy. We started off the week with 1,000 points down. I listened into CNBC and Fox Business, and it's not that bad. It's not really a plunge. I mean, this coronavirus thing, well, who knows how bad it will get. Yes, and right, that's right. Who knows how bad it will get, but I'll tell you one thing. I've been covering this for the last 3 weeks, 4 weeks, last month, and the numbers in the background, the debt, the cessation of business in China, the factories being closed off. Who knows how bad it'll get medically, but financially, this is going to be a disaster. So I decided to bring on the author of this book, The Fruits of Graft, the Great Depression, then and now. Great Depressions, I should say, then and now. The Fed was instrumental and basically boogering everything up way back when, and have been doing so. The man of the hour is Wayne Jett. Wayne Jett, who's argued cases in front of the Supreme Court. He's a lawyer and a published author, and has a very popular book. Talk about how you could get it at the end of the show. Wayne Jett, thanks for joining us today at this pivotal time on USAWatchdog.com.
Greg, thanks a lot for having me. It's wonderful to be here again.
Well, they were talking about rate cuts on television, and the financial business media was, we'll get at least a quarter. We need a half a point. They also had Peter Schiff on, who was on a year ago, who said who predicted that we would. He did it on my air too, as a matter of fact. He said that we would stop raising rates. They would have to cut rates. They would have to go back to QE. All that stuff has happened. Now they're in the repo market, of course, a form of QE. What do you think the Fed's response to the obvious financial disaster coming out of China? What do you suppose it's going to be? And is it going to make it better or worse?
Well, remember, the Fed already had one important reason to be accommodative, so-called, in terms of low interest rates and plenty of money at low rates. Now it has two major reasons. Probably this so-called disease problem from China is a larger one even than satisfying the president, so far as that's concerned. So all signals are indicating that the Fed will be as accommodative as possible, or as its own goals will guide it to be. So far, its goals have included to maintain and extend their reign in our country as the source of money and really what I've called the occupying force of globalist foreign powers. That basically what the Fed amounts to, and it's going to be doing the things that the Fed does, whether it tells us about it or not, and whether it's good for us and our economy or not. It's certainly its globalist purpose is not to maintain the stock market at a very high, nor to make it easy for our population or the president. So we'll have to see what their hidden agenda is as time goes on. But they are most likely in the near term to maintain a very accommodative, low-rate interest policy as they have so far. I wouldn't interpret this disease problem as anything other than indicating accommodative actions by the Fed. But of course, I would tend to describe the Fed and its financial condition as what I would call end-stage financial disease. That is, it's fiat currency disease. That is, it's in the end stage of going to zero, very near to it. I thought I had that turned off,
That's
but
okay.
apparently it's...
Well, just keep going. Just pick it up, put it in. There you go. There you go. So we're at the end stage. Go ahead and go.
Yeah, so we're in the end stage of fiat currency disease, which means they always go to zero. It's just a matter of how long can they extend it, and in terms of the way that they are able to acquire more hard assets with their worthless currency before it goes to zero for the rest of us in our minds, and we're no longer willing to take it. So putting in that in the context of where I've been for some time is I believe that the Trump administration is on the course towards returning to sound currency, meaning an end of the Fed and meaning a return to something in the nature of the gold standard. I mean, certainly my view is the gold standard, period. And in that circumstance, it's a matter of how do we get there with the least disturbance in our economy and in the well-being of our people. So I think the circumstance, as I've somewhat indicated in recent months, is that we're going to try to get through 2020 and the election without having to make that change, because it's not something that you do every day, to say the least. And it involves a great deal of displacement in terms of financial capabilities of the population, the provision of necessary services and food and accommodations and so forth. Very disruptive. And so, as I've described previously, I think the Fed, I think the president wants to be in a position to have the gold standard or the new currency in a ready position, and we need to have our current account balance, that is the amount of goods we buy from abroad, ought to be roughly equal to the amount we sell abroad. We made great progress on that thanks to the Trump administration. And
You need to hang your phone up. Hold on. There you go.
For example, the progress we've made, such as the new trade agreement with China, $50 billion worth of purchases of agricultural products, that makes a big dent. At least it makes a greater dent in the net surplus that China has had, $450 billion yearly with the U.S. And this thing of the so-called coronavirus that supposedly is shutting down China and its output is certainly going to make a further dent in that. But at the same time, there's a question of how that's going to affect the U.S. economy, the U.S. well-being, all of the things that we've been buying there that may be part of the supply chain, may be necessities for Americans, things of that sort. But this is the kind of thing you can expect to come about and be even imposed as a chosen time, right at the time of a presidential election, to try to dislodge anyone who opposes the globalist cause.
You think that they're doing this because you think this didn't just happen as some sort of coincidence? You're saying that the globalists have started this to see if they could kibosh the U.S. economy, the global economy, and Donald Trump. Is that what you're telling me?
I'm quite convinced of it.
Explain.
I think that most likely there was even some communication behind the scenes at some level, indicating that either you stop these investigations and prosecutions and so forth that you're planning, and there's so much talk about, or we're going to do this. And I think they got a no on that. And so the so-called virus has been released.
China is taking it on the chin. They are going to get destroyed.
I think one thing that you can be pretty certain of is that I don't watch the mainstream media that much, but the story seems to be that China's done this to the world, and I doubt that's the case, because it shut down their economy. That's the last thing they want to do. So why would they do it to themselves? It makes no sense to me. But I certainly have no inside information on that. That's just trying to use rational. It
Well, let's talk about the financial aspects of it.
Yes.
The Fed is going to print money. We're back to the fiat currency thing, and when you have a lot of something, the price goes down. It looks like the Fed is 60 billion a month that nobody talks about. That's what they're putting out in non-QE. They say this is not QE, and then they're in the repo market into tens of billions of dollars daily, buying junk. Do you think they're going to ramp this up even further and cut rates to zero? I mean, to try to combat this, what do you think the effects are going to be for the man on the street? And what do you think the Fed's going to do? So, what do you think the Fed's going to do? What do you think the effects are going to be?
I think the current rate of inflation is substantially higher than the government statistics indicate. Your friend John Williams would certainly be on top of that. So we already have inflation of a significant amount, and I suspect we'll get more, certainly because of what is being done presently by the Fed. This is unprecedented expansion of the money supply, the monetary base. I don't think that they're necessarily they are buying some things, they are adding to assets, but by and large, what they're doing with the repos is just providing financing overnight to the major banks who engage in very speculative type lending. This is one aspect of the terrible outcome of what happened in 2008, 2010, 2011. The passage of the so-called Dodd-Frank law that made the Federal Reserve the only regulator of the banks in the U.S. That's like putting the major banks of Wall Street in charge of all bank regulation in the United States, and it has been a disaster. What did they do as soon as the Fed took over as the regulator? The first thing we heard about is trillions and trillions of dollars they took on in risk on interest rate derivatives. More recently, they're now doing it with repos. Well, let me back up from repos. Actually, the big banks have taken on another type of risk by doing what could be called, again, derivative contracts. But basically, they are accepting business risk from major corporations in exchange for so-called insurance premium payments. And as a result, they've taken on, each of the major banks on Wall Street has been described as taking on so far over $40 trillion each in business risk in exchange for these premiums. Now, exactly why would they do that, either on the interest rate derivatives or on the so-called business risk? Well, one reason they would do it is that in '99, even before Dodd-Frank, Congress and the president, that would be Clinton, repealed the Glass-Steagall Act.
That's right. It was in the Graham-Blythe-Leach Act. That's one way to fix this whole economy, bring back bankruptcy. They, in effect, did away with bankruptcy. They, in effect,
yeah. By repealing Glass-Steagall, it allowed the banks to put together all of their other business risk with the assets they have in the form of deposits by everyday commercial clients, commercial and personal clients. And so, in effect, the deposits of all of their customers, the bank deposits, are now at risk depending upon how these derivatives work out.
If the derivatives blow up, will people lose their money in the banks?
That's correct. That's exactly what the design is. And as a result, that tremendous amount of derivative risk that the big banks have taken on exposes the FDIC. It would wipe it out in a moment. without even looking back. And so there would be a need for another bailout, and it would make the $700 billion of 2011 or 2008 look like chicken feed. That is the circumstance that has happened because the Fed was put in charge as the regulator of all the banks. As soon as they took out the Glass-Steagall Act first, but as soon as the regulator was disposed of and the Fed was put in charge, they have these trillions in the business risk exposure now, and the circumstances have never been worse so far as bank depositors are concerned, and the risk of they're losing whatever they have in banks.
Fast forward to today. So what is your appraisal of today? What's going on today with the Fed? What do you think the Fed is going to do with this never let a good crisis go to waste, coronavirus, and the financial implications, which are real? The financial implications are real coming out of China. All their factories are shut down. The goods are stopping. This is according to all kinds of different. Rabobank was talking about its disaster. They've shut their economy down. What do you think the Fed's playbook's going to be now, today? Fast forward to today.
I think that they're going to continue easing. They will be accommodative. If they were to do the opposite, for example, if actors in the market started demanding higher rates or something of the sort, they might reverse course, but I don't see that happening. I think they're going to be accommodative, and whether we get below zero, who knows at this point. But I think they can at least make it through to the time that we're ready to go to a sound currency. Other nations of the world, I think, are ready as well. And so we're heading in that direction. I think it will be accomplished.
What year is the sound currency? 2021? Is that your drop dead date?
Yes. I don't think it's going to go past that.
Let's talk about this now. I want to air this out. When you say sound currency, that means debts are going to be in dollars, in Federal Reserve notes. Are going to be we're going to have a jubilee. We're going to have debt repriced. It's going to get cut. There's no way we can pay back all these trillions and trillions of dollars of debt globally. I mean, this is going to be a real hard time for the world, is it not?
I think it will be difficult, but I think that's almost surely what's being mapped out in terms of the actions to be taken. But the rest of the world already wants and expresses that by their actions they're going in this direction of going to a currency that is backed by gold. Already the accounting for banks has been changed to change gold to a tier 1 asset. It was tier 3 before. In other words, they could only count part of it if they ever bought any. And so that's why they put it back to tier 1, because they've got to start acquiring assets that will give them something to stand on in terms of having dependable value within their control. So that's the kind of thing that we're looking toward, and I tend to think that we can be more successful at it this time than has been the case with any nation in the past. We certainly have had the time to prepare for it, and we have, I believe, a very capable and strong president able to foresee these things and act in a way that prepares to get them done effectively and in a hurry.
And if we keep,
I wouldn't be surprised, for example, that conversations of this nature would be involved in this trip to India. India is certainly well acquainted with the value of gold.
They love gold.
Very true.
But between now and 2021, are we going to see big inflation, rates cut, tons of money thrown into the market to try to thwart this coronavirus financial debacle. It's at least a financial debacle. Are we going to start seeing? We're going to see rates cut to zero. We're going to see tons of money printing. What happens to gold, silver, inflation? What happens then?
Well, I'm not convinced at this point that we're going to see much more in terms of money printing than what the Fed has already been doing. We'll see what is required by it, but in terms of GE going bankrupt, I don't regard that as necessarily a devastating effect. Obviously, it would be for its employees.
They are fighting back. They've laid off many thousands of people, 78,000 people in 2019. They say the headlines are they're trying to stave off bankruptcy. Other people, Macy's is filing for Chapter 11. Pier 1 is filing for Chapter 11. All kinds of people are filing for bankruptcy right now.
Well, those are the kinds of firms that have been basically financed by Wall Street. Let's see how Main Street does in terms of responding to the circumstances. I'm certainly not just waving away bad economic times, but nevertheless, the system that has been created on sand is going to come down. The sand is that sprinkled about by the Federal Reserve. It's not federal, it's not a reserve, it is a foreign occupier, and we're going to have to get rid of it.
And you think that they will help get rid of themselves by causing a lot of pain? Peter Schiff was just on CNBC and says, listen, what they're going to do is going to make it worse. They're going to cut rates to zero. They're going to print tons of money. They're going to try to, what they're going to do is make it worse. There's big inflation coming. Do you agree with what his, I'm paraphrasing. Do you agree with that? We're going to have inflation. The Fed's going to make it worse?
Well, we'll see what influence, additional influence, the president and his advisors may have. I think they've had some influence already in terms of reversing the Fed from where it was going in terms of raising rates and shutting down the economy at a time that we really need to rejuvenate it. Let's face it, the 2 years, or the 8 years, I should say, of the Obama administration was economic policy designed to have a failing economy. I say that without reservation. I watched it happen and could see it. Nobody says that we're going to raise taxes 2 years from now, except somebody who wants to that the economy should not recover. And yet that's exactly what President Obama announced when he took office. He announced the same thing 2 years later. So his first 4 years was clear he did not want economic growth. And then he raised taxes in the fifth or sixth year. So we had nothing except economic policy intended to make the economy weaken and lose jobs. And we finally got the turnaround with a change in administrations that is like night and day. And so that's why I say, from my viewpoint, I follow classical economic theory, not Keynesianism. And that's why I say that Trump's economic policy is classical economic policy. It's the kind of basic ideas and reasoning and analysis in terms of economic impact of your actions that was the basis for the growth of the middle class in the first place over 150 years prior to the time that the Fed came into being and so forth. And they went into this Keynes thing that was a way of obfuscating and hiding their real motives. And we go on from there. But we're going to...
Quick, I'm just about out of time. Quick prediction. Do we have rough sailing ahead with this coronavirus?
I think it's very possible that it will be contained in a relatively short period of time. I'm not convinced that it's going to be a long-standing, irreversible, worldwide kind of thing at all. Let's let's see what the science turns out to be in terms of the real cause of it. I'm not convinced that we know that yet.
Okay.
Or that it's.
But the financial impact is going to be pretty severe right now.
It looks like it is. Certainly it is for China. I'm not convinced yet what all the impacts will be for the United States. We haven't gotten yet to the matter of the Harvard Law Review and its basically plot to overthrow the Constitution.
That's all part of what they're trying to drive America into the tank, and they're involved in it basically. I mean, as we wrap up here, basically the plan is to do stuff that's anti-constitutional, anti-freedom and liberty.
Well, if I could describe it for just a minute, they basically had a law note in the January edition of the Harvard Law Review, which describes the Constitution as so unfair by not treating every person equally in terms of particularly the U.S. Senate, since every state gets 2 senators without regard to population. That's so unfair to everyone that they propose a means of adding 127 states carved out of the District of Columbia, giving each of them 2 senators plus representatives, and therefore giving the District of Columbia essentially control of the rest of the country in both houses of Congress, and immediately doing things to the Constitution that would turn it on its head and end our constitutional republic, in my opinion.
And so Harvard is flat evil.
Well, I would say this.
No, let's just call them what they are. Harvard is evil. Pompous, elitist, evil, Marxist, communist, globalist. Isn't that Harvard?
I would say a globalist in terms of their outlook. The globalists have infiltrated all of our political institutions and our academic institutions. Certainly, that particular thing, though, I ask myself the question, why would they publish it? A Harvard Law Review is regarded as a serious publication. This is not a comic book for play by the students. The students on the law review, ordinarily at any law school, are the top 10 or 12 people in the law school, the upperclassmen, and so it's a serious matter. I think they would put this out in the law review, if for any reason, to make it public and make it appear to be an academic conversation, when if they kept this under wraps and circulated it privately, it could be regarded as something that ought to be prosecuted. And so we'll see whether they're able to use it to raise money to accomplish such a thing.
Because Harvard is evil. That's really what we're talking about. The Harvard Law Review is evil and anti-constitution and anti-freedom. Isn't that correct?
Well, what they're looking to do is use only majority votes in both the House and the Senate to amend the Constitution. That is directly contrary to Article 5 of the Constitution, which requires...
which means they're evil.
2/3. It completely disregards those amendment things, overrides that, and pulls down the constitutional republic that we presently have.
Which is evil.
That's the way I would describe it.
Isn't it evil?
I would regard it as so.
Okay.
In my opinion, it is very much very, very destructive to all that has been done, all the many lives sacrificed to make this republic successful and to continue it. But I think we are at the process of bringing down exactly this kind of effort by the globalists to end nations around the world and to assume a dictatorship. That's what we're fighting right now. And that's what we are going to overcome. We must do so.
Wayne Jett, the book, which is quite a book here. Sorry, I knocked into that. Is the Fruits of Graft. You've It's a good selling book, top selling book. You sell a few every time. It's about the Fed and their action and the globalist puppets that the Fed actually really is, that they're not federal and there's no reserve, and they're really not out to help America. They're out to help the globalist and basically cull society down to just the minions that they can use, and everybody else should be depopulated. Wayne Jett, thank you so much for joining us today on USAWatchdog.com and giving us this warning and what kind of a big picture fight we have with the globalists. Thank you so much for joining us today on USAWatchdog.com.
Thank you very much, Greg. And may I say that get it on classicalcapital.com. It's $25 for the hardback, free shipping inside the United States. That's really the only place to get it. Everything else I don't sell on Amazon any longer. So classicalcapital.com. Thank you so much.
Thank you,
Great
Wayne. Appreciate it. I'll put the links up to your website, and they'll find the book on there front and center. And you also work and put some free information on classicalcapital.com. You're a great guest. Thank you, Wayne Jett, for joining us today on USAWatchdog.com.
Great to be with you.